I will buy stuff that's more than that, but I'm not trading the big cap stocks. My bread and butter seems to be value stocks. So stocks that I believe are undervalued, that are not making, where the companies are not making money yet. So kind of pre-earnings, cheaper stocks. Now, I do buy stocks that are making money, and I like it when they're making money. I even like, it's even better when they pay a dividend. But most of what I buy seems to fall into that first category. So the way I've got my screener set up, and I'll just share this with you guys. You should be looking at a FinViz screen right now. Yeah.
Yes.
Okay, so this is all free, right? So you can pay FinViz for their paid service. I have yet to find any reason to do that. I just use their free service, and you got to deal with some ads. And there's a few items in this FA list that, are missing that you would get in the paid service, but it's not anything that I would ever use. So that said, you can build preset screeners in FinViz. So what you can do is set what you want out of all of these and then save it. And so I run several. I run one that's value. Pre-earnings is what I call it. This is a little high. Actually, I was just playing around with it. I forgot to resave it. This really needs to be here. So really simple screener. I want debt to be under 0.5, both long-term and standard debt to equity. Reason for that is we're looking for companies that aren't swimming in debt in case they need to make a move and borrow money to get out of a bad situation. They're able to. Allows them to do offerings without dealing with their debtors. It just gives them more room to move if something goes wrong. Will allow a little bit of debt. 0.5 is a small amount. I'd like to see a price to book at under 3 and a price to cash at under 3. Honestly, I really want them under 1, but I'll buy them if they're under 3 and other things check out. I put 100 million shares or less here. Really, I try not to buy anything at under 50 million. But I run the screener a little, allowing for a little bit more just to see, because if like the perfect weekly W at the bottom of range has come in on something with 70 million shares out, I'm going to go buy it. That's just me, right? So, but I'm not going to buy something with 1 billion shares. The only other thing that I put in here is I want institutional ownership under 50%. I'd rather it be lower than that, but what we're trying to do is stay away from the super high institutional owned stocks. The thought process there being that the trade has already happened and you're too late if the institutions are involved, right? So, coming from level 1, institutions don't, what do they buy? They buy down markets. Well, if they've already bought it all up, most likely you missed the trade, right? So, you got to be real careful in that situation. You want to be owning it with them and be selling it when they do. And in fact, interestingly enough, that one I had on my screen, which I'll show in a sec, Emeren is a good example of that. So this is just a really simple screener. You could add a lot more stuff in here. I mean, there's all kinds of things you can add in here, but I really want just some basic filters. Then what I'll do is I'll sort by price here. I'll go to charts here. And honestly, they don't even make it to Trading View for me until I see something that I like, just based on these little mini charts. Like right off the bat, this one looks pretty good to me. I already own it, but we have obviously bottom of range. Most likely it's right at bottom of range. We can't see to the left here, but we got W's trying to come in. Compared to this one, which I happen to own and bought too early, which is still making new lows, right? So I'll just cruise through here once or twice a week. We don't need ads. Just looking for names that look good. And from there, I'll create trading view lists, right? This is one we've bought a ton of, but it looks like it's come back down into reload zone and maybe trying to W out here. We bought over here and sold all through here. So that one may come back on my radar as a reload. I see a little gap right there. That's probably where I would want to get back in. So we still got a ways to go. Anyways, that's one screener that I use. Another screener that I use is the same thing, but with earnings. And all we're doing is adding PE, price to earning ratio. I've bumped, and again, this is not normal. I would keep these around 4. I was just doing some searching, expanding my searching. So with companies that are earning money, their price to book and their price to cash will usually be higher. They're just not going to be as cheap based on their assets or, in the ratio against their assets because they're making money. So there's value there in the dollars they're throwing off in net profit, right? So we got to expect price to book and price to cash to be a little bit higher on those companies. So I'll run that a little bit higher. But same thing, all this does is weeds out all of those companies that are not making money or that are at really bad PE ratios, which means they're too expensive in my book. So you really want PE to be somewhere between, just barely positive and 15. Negative PE means they're not making any money, right? So, you could go above 0, which is profitable, but then you're going to get PE ratios of, 150 with some of the ridiculously valued stocks. So what we're looking for there is a low PE. Now I could go under 10 and tighten it even more, but I'm just trying to give a broad search at the moment. If that makes sense. Same thing. Come back over to overview. This is a really manual free way of doing it. Works for me. Sort by price. Go back to charts. And again, I'm going to look through here for anything that looks good. I mean, all the ones that are even close are already in trading view lists for me. So, at the end of the day, I could watch them at either place, but in creating these lists, this is how I would go about it. Let's see. I do run another screener that is just, bottom of the barrel value, price to cash less than 1. I still want no debt, or I'm sorry, I still want a little, very little debt. I still don't want huge amounts of shares. Again, more like 50 million is what I'm looking for. I still don't want huge institutional ownership, but really the main thing here is price to cash of under 1. And, going back to level 1, what that means is the share price is less than the cash per share on the books. So in other words, if they liquidated the company, the cash alone, not even the other assets that fall under like price to book, would more than cover the price I'm paying for the share, right? So this is actually my favorite screener. I love this screener. I mean, and all of the ones on the other two show up here. No, I'm sorry. I shouldn't say that. The other way around. All of these will show up on one of the other two, right? So, this is one we've made quite a bit of money on. It looks like it's trying to base. Let's see what we're at here. Yeah, I mean, actually, I need to relook at buying this, assuming that this chart doesn't drop way down over here. But, we've got 0 debt. Price to book is under 1 too, which is awesome. Shares are a little high. But if we get a nice W, I'll rebuy it. Their forward looking looks pretty good. I mean, this is something I would buy all day long. Again, I wish that was a little bit lower, but I've already bought this and gotten several doubles on it, or at least one. Let's see. Let's just bring that up. Sorry about the background noise. I'm sitting out on my porch. I'm not in my office today. I wasn't expecting to do a lot of talking, and there's an airplane flying overhead. So
totally
apologies
fine
for that. AIKI. Let's just look at that real quick. I'm also on a pretty small laptop, so it might bog down on me here. Okay, so yeah, I bought right in this W here. Sold twice on a double, and it's coming back down. Now looking at a little bit of a farther out chart, I'm going to get interested if we start Wing out anywhere in here. Looks like we've got a div working here, which is good. Trend line break. Someone was bringing up. I guess you could run one from maybe here to in here. This obviously from here to here has already been broken, but we don't see a W yet. Anyways, back to the fundamentals. That's a screener that I really like to run. It just gives you at the very least, the company is got enough cash on the books to do what needs to be done. Let's see what else. I do have other screeners in here. I have a Can Slim screener in here. I don't use it very often. I've got a WDB screener in here, which is something that's on my list. I really do like that model. It's a model you guys are going to learn in level 3, so I won't go too far into it. But I have a screener for that. I have a screener for the SOF, the secret options formula, which you guys are going to learn. So I won't go into that yet. And then this one is really similar to the other ones. By the way, I do have a GARP screener in here, which is kind of the combination of value and growth together. Yeah, which I really like. I have not been, they're hard to find, in my opinion. I don't come across very many. And this isn't a true GARP screener because I don't think FinViz allows you to put the settings needed. But basically, I'm looking for price to book under 3, which gives us our value. And then a low PE. I could go here if I wanted to. And then really you're looking for, this is the one that ties you in to GARP is, the forward looking, this to be low. So it's kind of not a true GARP screener, but it'll give you something in that arena to look at. The only other one, this one's similar to the first couple I showed you. It just adds in dividends. Okay. And I really tightened up. Like I want cheap stock that pays a dividend. If it's paying a dividend, they're making money. So, that means they do have a PE ratio, and I want it to be low, which means they're about undervalued, right? Still common theme, low debt, common theme, probably should set that to 50. I don't know why that's 60. I mean, whatever you mess around with on these, it's always going to just go to whatever you put in last. But, certain parts of the cycle, these will pop up. They don't pop up very often, but man, if you're playing like the little old lady, sell half on double type of thing, and you can get free stock that pays you a decent dividend, and heck, you could even go, over 5% or whatever, it's going to really limit you. Would we get one stock, right, that meets that? But and it's a Chinese stock. Bryden wouldn't like that one, but I don't mind buying Chinese stocks. But so is this on my radar right now? No, but when it gets back down into here, I run the screener every once in a while. I'd buy that stock at $2.97 or $2.97, right back at the bottom of range, right? And if I can get a double on it and then have half those shares for free paying me this dividend, that's a whole nother income stream, right? Little hint on dividends. You really do want your cash per share to be at least 3 times your dividend. Otherwise, it's not real secure. So this is many times 3. It's more than 3. You got 0.20 time, and then cash per share 2.88. All that does is it just means they got plenty of cash on hand to pay this dividend, because they can always change it. At any moment, they can say, no, we don't have the cash anymore. There's no dividend, or it gets cut in half, or. The other thing you can do on that as well is, let's just look them up. DSWL. Is that WL? I'm kind of dyslexic, so I get stuff mixed around. You can also check their previous dividends. So they only paid 0.2, so they paid half last time. I'm sorry, 0.1, right? That was half what we saw on the screen. So you can actually 0.9. So they're saying they're going to pay whatever that dividend was, but they actually haven't been. So that's kind of interesting, right? So are they doing better, or are they just projecting something that's not going to happen, right? It looks to me like they've been hovering right around that 0.1. So, I mean, in reality, maybe half that is realistic on a regular basis. But, you know, I mean, for me, I don't really care because I'm not buying stuff in my little old lady account for the dividend. But if I happen to have a bunch of free stock in there because of doubles that pays a dividend, that's great, right? Yeah. So that's kind of how I do things with screeners. I don't know if that answers your question or if that was helpful.
Yeah, it helps a lot at least. So yeah. So I played around a bit with the screeners as well and tried to figure out different ways, and I will still keep playing around until I will find my criteria, what I'm looking for. But it's always like helpful to get an opinion or like to see how advanced traders like screen. It was very helpful.
Okay, good. I mean, all it really does is showing you how I get the names I look at. So you know, I guess really most importantly is you got to come up with your plan. What is it that you're trying to buy? You know, what I'm showing you is for a little old lady plan for value names, and that's basically what I do.
Yeah. Cool. And last question, would you mind to share like a list with your stock picks?
My stock picks?
Not your stock picks, or what do you have on your watch list?
You know, I've got a lot on my watch list. I mean, I can show you, and this is not up to date. Most of my lists are, let's see. Let's see.
Okay, I can see.
Yeah, I mean, a lot of these are old, but let's see. Here's a good one. This is from June. So, you know, these are all vetted names. In other words, fundamentally, I'm okay with them, right? Doesn't mean that I'm going to buy them today, but I mean, I like to start. In fact, this one I do own and I'm underwater on, but that's fine.
Same here.
That's fine. Hold on. Somebody's trying to get into the meeting. Hold on. Switch back over there. Let's see. So, I mean, you can see I bought this weekly, kind of funky weekly W on the retest of that candle body high in a reload zone. I mean, there's a big glaring weekly gap out here that looks like we came down and refilled. I don't care. It really doesn't bother me. You know, it can just sit here. You know, I mean, it's down quite a bit, but you know, at the end of the day, to trade back up into this area it's going to happen at some point. So it'll just sit on my books. Now, do I like doing that? Of course not. But, you know, I mean, I have a percentage of my stocks that do that. I also did not fully buy into this name. So I have a bunch of cash in my TD Ameritrade account where is waiting for these names that I bought in for some reason, right? And they've continued to retrace. And my rule is I don't buy in again until I see a W. So my guess is we're going to come in, play around here. You know, I might set another nibble for right there, the green line, because in my opinion, I have a really good chance. Now we're looking at a weekly chart here, right? So this is a weekly bottom, or, you know, a weekly low. We have a really good chance of, if I catch that, of that being somewhere near the very bottom, right? You know, what percentage of time do assets range compared to extend in price, right? what is it, 80% ish,
80,
something
80,
like,
20 or 70,
yeah,
30. Yeah.
yeah. So I have somewhere between 70 to 80% chance that I'll be catching right near the bottom right there. So I might, and this actually, I'm glad we're looking at this because this one I haven't looked at in a while. I might set another nibble there, getting me up to maybe 1% of my portfolio. And then if we put in a nice W, maybe that becomes the bottom of my W, right? And then I would be adding to that to bring that up to, maybe 2% of my portfolio at,
Mhm.
the that darker orange line, the confirmation of the W. Now,
Yeah.
my plan basically says nibble in at good location and structure if you got it, and then add to it when you actually have a W or a true bottom come in. So,
Okay.
neither here nor there, right? I mean, as long as you get in honestly somewhere in this range. A lot of these, a lot of these are ones that this is, we've bought and already made money on. That one I don't own. I've been watching it, just watching, nowhere near ready. Oops. This one is one that I bought back in here, made money on, and now I need to rebuy it, right?
Mhm.
Let's go look at that one, see how it's doing fundamentally. BCOI. See where we're at. Yeah, so things have changed on them since last time around. They've spent some of their cash. I do like that they've got no debt. It's great. High insider ownership is good. Institutional ownership is not bad. Share count is great. Personally, and this is just my opinion, so please don't trade off of this. I don't care that they're not making money. Especially with these biotech companies. These biotech companies, they don't make money until they hit home runs.
Yeah.
I mean, they
True.
spend
Yeah.
hundreds of millions to billions of dollars until
Yeah.
that time. So all we're
Research. Yeah.
yeah. So all we're trying to do, I mean, were they making money through this? No, they weren't. Some news came out about some phase 3 trial, most likely. Everybody got all excited. I mean, all it takes is phase 3 trial is going well. Boom. Everybody runs into the stock for that week, literally. So, I don't necessarily like that they don't have much cash on the books, and I don't know if they're liquidating assets because these were much lower when I bought it last time around, but I would consider it. I mean, if we see a nice W come in here, especially on a weekly chart, I'd buy it. I mean, you can see I've started marking things up. I mean, is it going to trade back up here to this weekly gap at some point? Absolutely. It's gonna.
90%. Yeah.
I don't know why it's on a log chart. That's weird. Yeah, that's why this doesn't look like 50% there. I don't know what's going on there. There we go. All right, that's a little better. Yeah, I mean, we're not even going to hit 38.2 to fill in that gap. So is that a double? Yeah, it's a double from right where we're at right now. Is that a coincidence? No, it's not. And it's right down in all this weekly W action. So yeah, this is perfect for me and what I do in location. In fact, I haven't re-nibbled on this one. The only thing stopping me from running out today and taking a nibble is, that price to book and price to cash, but right in my wheelhouse. I mean, you can see all these names. I'm not saying they're all great names, but what I do on a weekly basis is look through the FA screeners that I showed you, and then anything that pops up that's not new, that's not in all these lists, gets added, and then I just revolve through them. Right?
Okay.
Make sense?
Yeah. Totally.
I mean, is there anything out there right now that's ready to go? There's not a lot. I mean, this stock is in good location. Fundamentally, it's a little iffy for me. Is there a reason to buy it today? I mean, what does your plan say? Can you nibble it just based on location? Hey, man, it's at the bottom of the range, right?
Yeah, it is.
Yeah.
Yeah, okay.
So, I mean, do I have like a list for you today? Yeah. I mean, I've got lists I'm following. There's nothing I'm pulling the trigger on. This is one I bought. I didn't catch it in here. So I bought it in here. Just a nibble. You can see where I'm along from, sitting
Yeah.
underwater. Totally fine with me. Looks like we're trying to set a base. Here's 50%, $21. I mean, that's what, a triple, just under a triple from, where I bought in. Now, granted, if we come down in here and put in a W, I'll just buy some more, right? I mean, a lot of the names I haven't made doubles on are like that. This is another one. This is I haven't looked at their fundamentals in a while. I bought them back here, actually, no, I bought them right in here. So in June, not best time to be buying stuff. So just small nibbles, right? But this is another one. I'm just curious, see what oil stocks usually do not meet my fundamental requirements. And this was one that did. Curious to see where they're at now. Still okay. Meet my criteria there. No debt, which is unheard of.
Yeah.
I mean, not great in insider ownership. We'd love to see higher insider ownership, but they own a little bit. Not bad there. Share count kind of low actually, which can be
very low. Yeah.
Can be problematic. But I mean, as long as there's volume on it, I don't mind.
Do you look at the short float?
What's that?
If you can go down to the screening criteria, the short float under
the short float. Yeah, I watch it. I mean, I don't take a trade off of it. I'm not trying to catch those squeezes.
So what's a good number? Like around 5% or below, or like even under 10 is fine?
I don't have an answer for you for that.
Okay.
I don't follow it enough. I mean, I watch it. I mean, if you find something like what happened with GameStop, right? Like those numbers were crazy. So it was really obvious, but I don't know enough about trying to catch short floats to give you a number.
Okay.
I do watch it, but I just kind of have an overall sense. It does not come into my determination on buying stuff at all. I'm not saying it shouldn't, man. If you figure it out,
if
you figure it out, let me know. I'd love to add it. I mean, what that would do is that would speed up the time frames that I have to wait for big pops, right?
Yeah.
Does that make sense?
Totally.
I just haven't figured it out. So yeah, I mean, send me a PM if you do. Give me a number.
Yep, I will.
I mean, that's kind of how I go about things. Totally from a value standpoint. Some people would argue, oh, well, you're buying, crap stocks that aren't making money. There is no value in there. A lot of people won't buy companies unless they're making money. I guess to me, value, I'm basing it off of the assets of the company, and it's trading at a ratio to that is, in my opinion, cheap. Right?
You got it. Yeah, cool.
Yep. Yeah, and then
so
one thing again, just how I do things. I said I would circle back to this. So this is that. Let's go there. Is that one I had up on the screen because it popped today. I mean, it doesn't do any good for me because I didn't reload on it and I had already gotten a ton of doubles. But this one, kind of an interesting dialogue about, so nice gap fill down here, nice pop, doing its thing. I just threw in a bid, somewhere in here at that gap fill, walked away, got filled, put in a nice M right after I got filled, went below what I paid, not too far, which is nice. And then boom, right? This is one of my winners, big winners, got several doubles off of it, right? So I wasn't even looking at this because it it hasn't, I mean, it came down almost to 88.6, but you know, there's this giant set of gaps here. So
Yeah.
I don't want to buy this thing until it comes back down here or gives me some sort of nice structure in the reload zone, right?
Yeah.
Hopefully a weekly W. But it did this today and it just popped up when I looked at, you know, my list of what I owned. It was up like 60%. So got me looking at it. I'm not going to go buy it, but what's really interesting about this is that if you look at the FA, you know, uh, the institutions had a whole bunch of this very recently. They're when you see a negative there, that means they're selling. So
Yeah.
what are the institutions doing? They're selling it, right? So are the insiders. Is it a good time to be buying that? Probably not.
Absolutely not.
No, and then also these all look horrible, right? Like their debt went up. They went, well, actually, no, it didn't. That's fine. But these numbers all went up. You know, they're tearing through cash and whatever they're doing. So anyways, I just thought that was a good example of, you know, way too late to the trade. You needed to be in over here because,
Yeah.
you know, at that point, this was low and they were buying a lot, you know.
Mhm.
I mean, as long as the institutional ownership is low and you see a green number here or a positive number here, they're still getting in. And the
Yeah.
insiders were buying too. And I think we actually got in under what the insiders were buying, which it'll show you down here. Yeah, you can see
Yeah.
all the insiders are selling, 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 selling.
Yeah.
And they're probably kicking themselves because they probably didn't sell up here. Right.
Yeah.
Yeah. So
Yeah.
anyways, yeah.
Missed that.
Yeah. I mean, most likely, you know, so that's kind of a good narrative of like, you know, the before and after of these little old lady trades. So anyways, I know you didn't ask me about little old lady, but you know, anything in particular in these screeners that you don't understand, you can, you know, just Google it, you know, any of
Yeah,
these,
I know. I
any
know.
of the, in
I
any
do it.
of
Yeah.
these.
Yeah.
Yeah.
It's
I mean,
just more about the numbers. I mean, about the ratio itself, you can Google it, but it's like particular, like what are you looking for? For example, shares outstanding. What is interesting? What is the number? So that you
right.
can't Google actually. So yeah.
No, you don't want to Google that.
Oh well,
Yeah.
yeah. Fair
Yeah, I
enough.
get it. I get it. Yeah. I mean, so share count just for that one. I mean, I go with what Brian says, that 20 to 30 million range is the sweet spot. I really don't care about low share counts. If everything else checks out, and then I try and limit it to 50 million. But like I said, if everything else is spot on and I love it, love the, you know, the trade, I'll go up to, you know, in the 70, 80 million range
Yeah.
shows out. Yeah.
Yeah. Cool. Thank you very much. It was very helpful.
Good. All right. Good. That's awesome. Anybody else have any questions about anything? Any questions about how level 3 is going to go? I'm not going to get into the material, but let's see who we got here. A few people here. So I can give you my experience of level 3, if it's worth it hearing. So I did level 3. Oh man, I want to say, well, probably in 2018. I did level 1, 2, and 3 all in a row. Way back when Brian actually taught all 3 levels. So I had Brian for all 3 levels. And level 3, I almost didn't do it. I mean, I knew in level 1 that I probably was never going to be a day trader. You know, things like daily and weekly harmonics don't happen very often. That's more of a day trader thing. You know, I heard about options, but wasn't even really, they weren't on my radar, which is another big piece of level 3. You know, did level 2 just because, you know, could have just done level 1 and been totally happy to go off and do exactly what I'm doing right now. You know, everything I just talked about for the last however long that was all level 1 stuff, right? Level 2 was awesome. I really enjoyed it. Kind of blew my mind. I did like a lot of the modules, you know, I think trend lines was in there, you know, those types of things. GAN was great to see. I did kind of go down the GAN road for a little bit and then realized it wasn't something that I was going to use on a daily basis. It's just too abstract for me. And then I almost didn't take level 3, but I thought I'd just complete it, you know, since I decided to take it. And I'm actually really, really glad that I did. Two reasons. One, understanding harmonics. I don't use them in my little old lady trades, but I do use them on a fairly regular basis, just as like a 5th, 6th, 7th, 8th reason to take a trade. And I'm not very good at them because I don't practice them all that often. But what's really interesting is Steven is kind of the harmonics guy. He runs a harmonics chat room. He comes to the secret options formula trade, you know, stock trading group that we do on Tuesdays. And quite often my value picks at my location or close to it line up with some harmonic that he spots right away. So that's kind of an interesting confluence there, something that I wouldn't expect in my level 1 little old lady trading. And here's a guy picking harmonics out of my levels, right? He gets all excited when it happens and he goes and takes the trade with me. So that's kind of interesting. The things that I really got out of level 3 for me, and there's a lot of modules in there, but was options and seasonality, trading seasonality. Trading seasonality is really important for the little old lady, level 1 graduate. They get a little bit of seasonality, but you're going to go down that road and just trade on higher time frames and play the game of buying with no stops and letting the trade run its course. The more you can tighten up those waiting times, the better. You know, I'm fine to wait a year if I need to, but it's great if I can get a double in a month or 2 weeks. So seasonality to me is really, really important. And honestly, I kind of broke my own rule and bought a bunch of stuff over the summer when I probably shouldn't have. You know, waiting until we get through the fall into the next season for happy time, if it's going to be a normal year, probably would have been a better idea. So that was a really important module for me. I mean, really for me, level 3 was about the options, and it is fairly mind blowing, and you can go down many, many, many avenues with options. I tend to stick to the easier trading models for options, like the secret options formula that will teach you. It's probably the easiest of what I've seen, and it's super powerful. But man, there's a lot of different things you can do with options, and it really is a game changer. So really, I think level 3, it's a lot of work coming up, and it's a lot of really crazy information that's going to be hard to understand. But if you can dedicate the time and get through it, it should be a game changer for you. It really was for me. And interestingly enough, I do buy quite a bit of options. But I also find that the stock buys that I do, instead of buying the option for the little old lady plan, if that stock is optionable, 9 times out of 10, the option will meet the secret options formula at my level for a little old lady buy of the stock. So it could actually become a reason for taking the trade, even if you don't go buy the option. And I don't know if that makes sense because you don't know the formula, but you know that with the formula, it has to fit within a certain parameters having to do with price of the option and other things. So it's kind of like level 3 is ties everything up and gives you a whole bunch more tools that are, as Brian would say, at the God mode level. So anyways, that's kind of my experience with level 3. I've been a TA of level 3 for, this is probably the 6th or 7th term, something like that. So I've heard the information from Brian over and over and over again, and it's been really good to be able to digest it over and over and over again. If I do become the level 3 instructor, which I, am working towards, I will need 1 or 2 TAs. And if somebody steps up from this group, what you get is you get paid, but you also get the ability to get things like options pounded into your head over and over again. So anyways, what do you get out of level 3? Moving forward, I guess that's not the right way of saying it, but what do you have access to? The secret options formula group is a really, really good group. It was named that because it was a group that Brian and I started. It actually was originally just Brian and I. We decided to, we have a shared trading account. We each threw like $1,000 into it, just a small account. And our goal was to trade penny options with the secret options formula, just as a proof of concept, just to prove the point that it works. And we met every week to go over our plan. Brian likes to joke that he likes to make veterans who go find him trades. Well, that's literally what I did. I spent time searching for trades and brought them to him, and we had our little meeting and we bought what we wanted to buy. And we started bringing other veterans in to help us, and that kind of made the secret options formula group. It's now kind of morphed into all types of options trades and a lot of just straight stock trades. But it's a pretty good core group of veterans. I share all of my stock picks there. I am in the process of creating a stock pick newsletter. So there's going to come a point when I need to sit down with Brian and say, what happens now that I'm ready to charge for my newsletter, and I'm giving the information away free to this group. I'll let Brian decide how he wants to handle that. But for now, I am sharing all of my stock picks there. But people like David O, who's super into trading Head and Shoulders and other price structure type setups, is a regular contributor there. So, you can join these other groups. There's a few others, there's a Harmonics chat room, and really stay involved. Or you can just go off and do your own thing and do your own trading. So anyways, that's kind of my thoughts on level 3. I know that was long-winded, but most people don't get to hear what I think about level 3. And to me, it was actually my favorite of I actually liked level 3 the most, then level 1, then level 2. That's just me. So anyways, anybody have any other questions or anything they want to talk about? Where are you guys in the world?
I'm from Germany.
Okay. Australia, Iceland, Canada. All right. So I'm in Hawaii, the Ukraine. So it's like 11 in the morning here for me. It's late for you guys in Europe, huh? Yeah. Okay. I guess another thing that I found really, really, really important, actually, this helped me through all 3 levels, but especially level 3, was finding some people to study with. Unfortunately, I don't have anybody else here in Hawaii, and we're in our own time zone, and not near anybody else. So I had 2 study partners, one in Australia and one in England, and we were still able to make it work. We held Google Meets to do it live. We did it through messaging apps. We studied, through private messenger on the Rational Investor site, but we tried to meet once a week, and not all 3 of us would actually get there every time, but between all of those, ways of communicating, we were able to study through all 3 levels together, and it was super helpful. Honestly, I don't know that I would have passed the level 3 exam on the first try without that group. So, if there's a way that you guys can reach out to each other, well, there is a way through the group, your class chat, but I would suggest that you guys try and form study groups. It's super helpful, especially leading into the final exam. It's not an easy exam for level 3. It was harder than the other two. So that would be my one suggestion, or additional suggestion to you guys. Try and find somebody to study with. Even if it's not in person, even if it's just messages back and forth. And I still keep in contact with those guys. We still trade ideas, not so often. We all have families and lives and are in different time zones, but we still do talk from time to time. So, how are you guys enjoying the TRI program so far in level 1 and level 2? Anybody want to come on and talk? It's amazing. Good. Yeah, I mean, it changes the way you look at things. For me, I came to TRI in the crypto run up in late 2017. Never was into stocks or trading or crypto. Yeah, video information. You're talking about class videos. Yeah. So I think, are you talking about through all 3 levels or just level 3 so far? Yeah, yeah. Okay. Yeah, I mean, it's all good feedback. I'm just curious. I'm curious because the classes have changed. I mean, they were live classes 3-4 years ago. So when I went through, you listen to Brian twice a week in every level. And that's changing, and it needed to because he was working like 90 hours a week and more students were coming in and all of that. But what could change on those? Is it just the presentation or is it the information? Okay. Okay. Yeah. Interesting. Yeah. No, that's good feedback. Hmm. Not a big deal. Yeah. You were able to get the information and retain it though. Yeah. Good. Good. Yeah. Yeah, I've been wanting to sit in on some of Grimm's classes, but they're like super early in the morning, Sunday morning for me, and I just haven't done it. I think it's like three or 4 in the morning or something for me. Um, I would love to sit in and see how he handles his Q&As and kind of brush up. There's some, I like to use a lot of the level 1 concepts, but there's some that I need to brush up on. Um, yeah, one of these days I will. Yeah. And then how was level 2? Yeah. 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 Yeah, yeah. Was trend lines in level 2? It's so bad, I should know that. What's that? Yeah, I mean, that's one that I use constantly. I mean, I use them on weekly and daily charts all the time, right? But yeah, you're not gonna, for me and all of this, you're gonna pick and choose what you're gonna use, and that's the key to all of this. You get to the end of level 3, hopefully you've already got an idea, and maybe you're already trading or investing, but you finish up, and then it's like I went and rewrote the few trading plans that I had after level 3, right? And of course, I thought I was going to be like spread trading options and this and that. I don't. In fact, Brian and I are talking about doing some together. But I did rewrite all those trading plans and really stop and think about, okay, like now I'm done with this school. How am I going to go about building a pile of money, right? That's the goal, right? So And interestingly enough, I'm just about to sit down and rewrite. I have 2 or 3 trading plans. The only one I won't be revisiting is the little old lady, which is, just happens like clockwork. Yeah, you don't need to do much on that trading plan. So, yeah. But I mean, anyways, guys, I hope that level 3 is something that is super helpful to you guys. I mean, I didn't want to hope I didn't scare you with what I said about harmonics and options. The flip side of that is it's awesome information. I mean, it really is. You can make a ton of money in options. I mean, you need to know what you're doing. You really do. I mean, you can lose your ass very quickly in options too. But yeah, well, interestingly enough, if you approach something like the secret options formula from a little old lady perspective, you're not ever going to lose your ass. And I'll just leave it at that, because you need to understand the formula to understand what I'm saying. But there's a way to approach it from a very risk adverse way. I mean, options have a time limit. So it's not like the stock you buy in the little old lady account and 5 years later you could still be waiting for your double. It will expire at some point and you've lost that money. But if you treat your trading plan for those from a risk standpoint like a little old lady would, then you're never taking more than a tiny little nibble on each one, right? So anyways, there are ways to do it without being too risky. And that's kind of, I mean, I don't know if with everything I've said in the last however long I've been talking for, maybe you're getting the idea that, I'm the little old lady value investor, right? So of course that's how I'm going to approach options too, right? So, but the good news on that is, actually the great news on that, in my opinion, is you're going to get a whole bunch of options information. And if you happen to be like me, you're going to take away a good solid set of how to trade options from that little lady risk adverse perspective. And if you're like Ray, who I think was a student last term, that guy's writing algorithms to spread trade. So, I mean, there's 2 very different ways to do it. And I mean, I want to get his algorithm and use it to do spread trades, but he's got to vet it first, right? So I'm not going to get it in its test phase. So anyways, yeah, don't let what I said scare you. It's super great information. You just got to get, you just got to get through the information and not get behind on it. That's the big key. Once we get through, next module is Pro Trader Workbench, which is great. But nothing super crazy. I mean, a lot of it's review with a bunch of extra ideas thrown in on how to go about stop management. Doesn't apply to the little old lady, but it'll apply to the position or swing or day trader. But then we get into harmonics, which is 1 module, and then there's 4 modules of options. And those 5 weeks, those are the weeks you do not want to get behind at all. So stay on the material, dedicate the time. Our classes are going to be super long. You saw Brian and I joking in the last video about only 3 hours, a class for that week. I've been a TA when he did 4.5 hours Q&A one of those weeks for a class, so it's a lot of material and none of it is super easy. I wouldn't say that it's just very foreign. It's not anything that, unless you've learned options in the past correctly, it's not anything that will sit in your brain as, oh yeah, that makes sense. So once we get through that, then things kind of taper off a little bit, quote unquote taper off. I mean, we get into seasonality and sector rotation, which in my opinion, like I said earlier, are super important. And, I mean, they're not going to be important to the day trader, but to me, they're super important. And like I said, I actually broke my own rule and wasn't paying attention to seasonality. In fact, actually, that's the wrong way of saying it. I was completely paying attention to seasonality and just went against what my own rule is written into my trading plan and started buying assets. And, after the sell in May and walk away, instead of just going to the beach for the summer, right? So, and it's okay. I mean, my little old lady account is still way, 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 way up, but it would be even better off if I wasn't sitting a little underwater on, a bunch of assets bought. They'll W out, they'll go back up to their 50%, and I'll get my doubles, but I just got to sit and wait because I didn't follow my own rule, right? So, yeah, I mean, I guess that's what it all comes down to is you can learn all the information, you can learn all of the material, but if you can't stick to your own rules, you got a problem. And if you continually break your own rules, then you might as well just go home and not do it anymore, right? So it's all about learning from the mistakes, right? So, last June, I wasn't buying a whole bunch of stuff. I got it right and really just hit a home run going into the end of fall, winter season. This June, I broke my own rule. And again, I'm sitting very positive in my account, all good. But now I got to sit underwater on I don't know, 10% of what I've got in my account, for assets or whatever it is. The big question is, what will I do next June? That's the question, right? So that's where journals come in. And honestly, I'm horrible at journaling. I have started 15 journals and I cannot finish them or continue them. And that's the honest truth. Like, I am horrible at journaling. And that is one of my major, major flaws is, if I had a really awesome journal and actually took the time to go back and read it, I may not have bought what was that? Whatever AEI, or no, it wasn't AEI. It was one of the first one I threw up on my list that I said I bought that I was underwater that you guys saw, right? If I had been paying attention to my journal, that wouldn't have happened. So, yeah, same for Arn, I guess. But it's all part of the psychology of all of this, right? So nobody's perfect at it. Really, do you win more than you lose at the end of the day? Is what it boils down to, which, starting to sound like Brian when I say those types of things. So, but yeah, I mean, I've been talking a whole bunch here, giving you my perspectives and thoughts. I mean, hopefully it's helpful. I don't mind answering any more questions. If there isn't any more, we can just kick off and see each other next Wednesday. The way I understand it is no class on Saturday because Brian's moving, and I could be wrong, but the way I understand it,